Hey everyone, welcome back to another episode of Be Burning Smart. I'm your host, Augustia, and today we are diving into Bitcoin. So Bitcoin just smashed through the $120,000 mark around noon, I think, in Beijing time. Pretty wild stuff. As I'm recording this right now, it's still hovering around the 120,000 level. It hasn't dipped below the 120,000 yet, and the peak actually hit over, I think, the 123,000. Then it's pulled back a little bit. Still, it's holding strong above the 120,000 threshold. Now, looking at the Bitcoin's previous major rallies, they've basically all been driven by the policy move. And you've got the Fed cutting rates on one side, and the other side, people are getting pretty bearish on dollar-dominated asset. So everyone's scrambling to find an alternative safe haven place. It's pretty much the same logic as gold. Plus, we were seeing these massive waves of institutional money flowing into Bitcoin lately, which really pushed the price up suddenly. So I am doing this dollar cost averaging thing. I buy a fixed amount of Bitcoin every Monday. And when I bought last Monday, the price wasn't nearly as crazy as it is now. I knew it was still in like the 100,000 to 110,000 range. But when I checked in my phone last Sunday, boom, the price had just shot up out of nowhere. I what the heck happened? So I started looking around and thinking about what's been going on recently. That's when I decided to tweak my allocation a bit. I've been buying a little too much Solana and Ethereum. So I converted some of that into the Bitcoin. It's just kept climbing over the next couple of days, including Sunday. It just hadn't broken through that 120,000 barriers until I think yesterday, Monday. Yeah, the one is finally punched through. Bitcoin has basically become what I call similar to the US equities at this point. It's essentially an asset now. And I say it's become the major assets category. If you are interested in it and you've got the means, you can actually invest in it. I mean, looking at what's happening globally. So definitely check this, will get the clear picture of where the things stand. Even if you are not listening to my episode, and most of the mobile banking apps now have invest and wealth management section, funds, precious metals, and they will all provide summaries. Basically, the asset reports for the first half of 2025, you should be able to see the house trend pretty clearly. And as long as you are following this trend, you are not going to lose money at the minimum. And you are looking at returns probably in that 3 to 5% range. Now, if you want higher returns, you are definitely going to need get into higher risk assets or use leverage. But here's the thing, I really don't recommend using leverage with Bitcoin. Most people I know who've leveraged apps on Bitcoin either didn't make much money or got absolutely wrecked. So if you want to play it safe and steady, just skip the leverage and invest in the fundamentals. Just wait for it to appreciate. Some institutions are predicting Bitcoins will hit $200,000 by the end of this year. Right now, the Bitcoin's price has really jumped nearly 20% since the beginning of the year. We're talking about the 19 to the 20%. So I think this prediction could actually happen at some point. Even if it doesn't break the $200,000 by the year end, it's gonna get to this point eventually. Based on the current US policies, hitting the 200,000 is pretty much a done deal. If you don't understand the blockchain tech, don't know how to navigate the different chains, and think leveraged trading is too risky, and just buy Bitcoins directly and wait for it to appreciate. Don't mess with anything else, and just stick to dollar cost averaging. Since it becomes a major asset, you are basically buying into its trend. The best way to buy trend is through the DCA. That's dollar cost averaging. It lets you stretch out your time horizon and smooth out the risks over time. When you are dollar cost averaging, don't look at the price at any certain time. This way, you will keep a more stable mindset and make some profit shouldn't be an issue. Whether your principal is too big or small, you've got to stick to the DCA because the different stages test different things. For example, when you are working with smaller amounts of capital, it tests you whether you can stick to DCA when the cash is tight and whether you can keep going when the prices are high. When you are thinking, okay, maybe it's too expensive to buy in right now. When the cash is tight, even if we are at a low point, you might think, I'm strapped for cash, so I will skip DCA this time. So it mainly tests these two different things. But when you got more funds or a large principal, the test becomes checking the price every single day. Your principal is substantial and we might be at a high level right now. So you need to analyze the trends and figure out if it's a good time to sell. Of course, ideally, all your assets are long-term plays, and so you don't need to stress too much. Just keep investing consistently. But you still need to understand how to sell and know the process. Otherwise, if one day you can't sell or it gets locked up, you are gonna to be stuck. The key thing is to understand whether the assets you are buying, whether it's a Bitcoin or something else, is it something that you can consistently invest for a long time. Short-term trading where you are buying high or selling low is fine, but first, it's exhausting. And second, you are only making small money. If you want to make big money the easy way, you need to find an asset that, as Buffett said, has a long slope and a thick snow. That's a good asset. This Bitcoin surge is basically due to the policy reasons. You just need to follow the big picture's direction. A lot of institutions also bought in last week. Probably after getting wind of some news, the Federal Reserve also released policies, and the entire Bitcoin market is still digesting the policy content right now. I don't know if it's gonna surge even higher or gradually fall back into 110,000 today. Means that the 120,000 levels might just be the brief 24-hour experience. But following the major policies, you basically won't lose money. And hitting the 3 to 5% return is definitely doable. For Bitcoins, it isn't even challenging. Normally, if you treat it as a major asset class for the DCA, your return won't be lower than, I think, 7 to 8%. Of course, it depends on timing. If you stick with DCA starting from the beginning of this year, your return shouldn't be stable above 10%. This can be verified through the data analysis. You can run the numbers yourself to see. You can also pick up some books like Just Keeping Buying and The Psychology of Money to understand the importance of DCA. Some people might ask if they should wait for Bitcoin to drop lower before entering into market. That's fine too. You could wait until the market has fully digested the current policy. But it's unclear if there will be more policies coming, so given the Trump style. Bitcoin is fluctuating more now due to the external factors. This surge affected everyone. Bitcoins, Ethereum, Solana, and even Musk's Dogecoin are all rising. As investors, you should know that whoever has a higher unit price will give you the bigger gains and better returns when you invest. If you want to allocate a proportion, you can base on its price ratio. For example, the Bitcoin is 120,000, while the Ethereum is 3,000. So that's about a 40-to-1 ratio, which you could use this ratio to buy. Don't make investing too complicated, or don't make it too simple either. When you are analyzing the trends and the factors, don't think too simply. But when you are actually operating and allocating, think it's a bit more simply. This way you can stick with it better and adjust the positions when needed. I previously adjusted my crypto holdings based on a price ratio, which now looks like it's a really smart move. You can use leverage, but don't use it too much. Or if you don't understand it, don't use it at all. Follow this policy. That's the safest approach. Don't think about getting 100-fold returns through the heavy leverage. Often, if you approach it with the mindset, I'm just saving money and watch a trend, aiming for returns similar to the US stocks, you will actually get good results, and your returns won't be low. If you are thinking about leveraging 300%, and even if you achieve 7% to 8% returns, you might still be unhappy due to the psychological gap. The mindset is super important, and choosing the right benchmark is crucial. That's a quick rundown of today's news about Bitcoin surge above 120,000. And the analysis and reasons are still the same factors we've been talking about. But now the Bitcoin needs to digest its policies. It becomes a policy digesting market. Yeah. And that's wraps up today's episode. I hope this breakdown of Bitcoin's latest surge to 120,000 and beyond has been helpful in understanding where we stand and what might be coming next. Whether you are a seasoned crypto investor or just getting started, remember that staying informed and sticking to solid fundamentals, just like dollar cost averaging, can really pay off in the long term. If you found today's episode valuable, and here's how you can help us keep bringing you this kind of content. Hit that subscribe button right now. It literally takes 2 seconds and makes a huge difference for our show. When you subscribe, you will never miss an episode, and you will be the first to know when we drop new content about the market trend, investment strategies, and financial insights that can actually impact your portfolio. And hey, if you are feeling extra generous, smash that like button and drop the comments letting us know what you think, and share this episode with anyone who might benefit from this kind of market analysis. Your engagement helps us reach more people who are trying to navigate these crazy markets. It helps us keep producing this kind of content that actually matters to you and your financial future. Remember, the best time to plant a tree was 20 years ago, but the second best time is right now. See you next time. Goodbye.